You gotta wait for me.
Yeah.
Hello, everybody.
Are you ready?
We are in Naples today.
What's up, everybody? Scott DiGregorio, Primary Residential Mortgage.
And Edgardo Valentine, Primary Residential Mortgage. This light.
Your lighting's all messed up.
There you go.
There we go.
There we go.
There we go.
Much
now
better.
your shirt looks clean.
Dude, Colombia plays today, so I'm wearing my...
Oh, dude, listen, man. We got women's in France in the Women's World Cup. Big.
That's a tough one.
Big.
Yeah, but Colombia plays in the Men's Cup America against Chile. Big game today.
Yeah. Yeah.
So,
are you a soccer fan?
I am. Yes, I am. Like the rest of the world, I am. Yep.
All right. So hey, let's talk, man. What's going on in your world, man? I know one thing that is exciting is we're freaking busy.
We're busy.
We're super busy.
Yeah, which is good. It's awesome. Helping a lot of people. Actually, I am doing a bank statement loan right now.
Nice.
Yeah, very happy about that. It's going super smooth.
Mm-hmm.
And you know, yeah.
You don't want to jinx that puppy.
That is true. That is true. But yeah, we have a closing date for the end of next month, and the underwriter asked me if we wanted to close early. So
those are good calls to get.
Yeah, I mean we're talking about a month ahead.
Yep.
So really nice about that. I did a post on Facebook yesterday that we had a loan clear to close.
What's up, Bobby?
Clear to close from start to finish in 10 days. Not 10 business days. In 10 days. They were, messed around, jerked around by one of the big banks, one of the red ones. Mm-hmm. And they came to me. They gave me all the documents that I needed. We submitted to underwriting. It was a really short time frame, and we hit the closing date. Yeah, we got in and out, and
cool.
The whole thing, because the clear to close, and then we have to wait the 3 business days, like 14 days to finish the whole transaction.
It's killer. Well, look, let's dive into the meat, man. Last week we prefaced that we were going to talk about the iBuyer thing going on, and
I'm sorry, man, about last week. So. There's one thing that I wanted to touch on.
Now, last week we talked about the lawsuits and all that chaos with the real estate industry.
And we've been mentioning the recession.
Yes.
Right? We've been mentioning the recession, right? So what's a recession, right? A recession is the GDP going down for 2 quarters.
Right, 2 quarters.
So we've been saying that. We've been talking about that. We did a video about that 2 weeks ago. And then the GDP for last quarter came in, and it came in strong.
Yep. Yep.
So completely against what we've been talking about, right?
No, not at all.
No.
Okay.
Why not?
So let's talk.
I think it's important. Let's touch on that.
Okay.
Because there might be a discrepancy.
Otherwise, we look like we don't know what the hell we're talking about.
Exactly. So and this was expected, right?
Yes. This is completely expected.
Expected. Why?
Okay. So look, let me break it down. Okay. The last GDP number that came out was complete bullcrap, and here's why that's the case. Okay. But bullcrap meaning, obviously it was accurate, but bullcrap meaning it was a false indicator. And here's what's happening. With the tariffs that are out there, a lot of companies spent a lot of money to build up their inventory. Okay,
right. Because they're saying, hey, the inventory for you to buy these products, it's going to be more expensive
because of tariffs.
Next month, 3 months from now, whatever, because of the tariffs. So if you have a budget, the smart thing to do is, okay, let's buy all these things now before the price goes up.
Exactly, and this increases inventory. Now, GDP is usually a measure of consumption, okay? So normally if, I don't know, if a desk manufacturer builds a whole bunch of desks, generally that's being built to meet demand, but the GDP was messed with this time because people built a whole bunch of desks just to have the desks at their normal cost.
That's right.
So they didn't have to raise their price. So what that means is that that's going to delay the negative GDP. And look, we don't know when the recession is going to hit. We just know it's going to hit.
We just know it's going to hit. And all the other indicators are pointing towards that. And then the one thing that's, kind of like the outsider is the GDP last time. Right. So there is an explanation to that. And I am sure, and Bayer Habib was talking about that yesterday, that it's going to be heavily publicized. The fact that, hey, look at the GDP numbers,
Right.
everything's looking great, don't worry about the economy, everything's fine.
Now,
So it's worth mentioning.
It is. And the other prediction we made, which we nailed, was interest rates are going to get lower, and
they are.
Us not locking our clients at application, locking them in the 11th hour, is consistently saving our clients between 1/4 and 0.5% in rates.
Right.
So that's big.
And look, for all of you shopping right now, everybody that has been qualified by either of us, everybody that has been qualified, look, you might qualify for more money now because that changing rate will allow your purchase power to be that much stronger. So keep this in mind. Run numbers by us.
And by the way, that's why, and I know we touched on this last week, but that's why during a recession, house prices go up.
Exactly.
Okay. So anyway, so that's that. So yeah, I'm glad you brought that on because you're right. It's if people aren't understanding what's going on. Now let's talk about this iBuyer thing.
Yes.
Okay. Now look.
Big. Scary
crap, man. There's
scary,
no around it.
Exciting. It's you know, it's the new world.
And look, let me preface this, okay? I'm not a big Chicken Little sky is falling type of guy, so none of this stuff is doom and gloom stuff. This is just reality. The question we have to ask ourselves, those of us in the industry, how do we have to shift to stay ahead of this? Okay,
and be realistic.
Right.
We have to be realistic because look, a lot of times when I speak with realtors in the classes we do and all of this, we end up talking about, well, that's never happened. Things that are never gonna replace us. But it's this sentiment. We gotta be realistic. And if something if it's easier to do something via technology, most people are gonna do it. So how do we adapt and how do we give enough value to people?
Look, the reality is this, and anybody who watches Gary Vee knows this stuff, but the internet is going to massively impact every industry on the planet, okay? Some sooner than others.
Right.
Bookstores, trouble. Travel agents, trouble. New York City taxis, trouble. Right now, real estate mortgage, okay, but it's silly to think that'll last forever. So look, let me talk about what an iBuyer is. So an iBuyer is a company that basically buys the real estate from people instead of going through a traditional real estate agent. And when the concept first came out, it was really like super lowball offers and that type of thing. But as you would expect, the concept of iBuyers is maturing. Okay, we have companies like Open Door, Zillow does it. Keller Williams now has an iBuyer model within their platform. So look, this is what we learned at Vegas, and it's real. So look, let's. And I got some math here if anybody cares. I got notes, but look, let's check it out. Let's say you call up one of these iBuyer models and you say, look, my house is worth $400,000.
I think my house is worth $400,000.
I think my house is worth $400,000.
I want to sell my house for $400,000. And think about, when you're listening to this, you got to really focus on the convenience of it. The convenient aspect of it. How convenient it is for a seller.
You're pulling the rug out from under me. We should probably close with that.
Mm-mm.
No?
No.
What the hell? What do you guys think? I think we should close with that.
I think you have to put this in mind. You have to put yourself in the mind of a seller. You're a seller. You want to sell your house. I think my house is worth $400,000. What's the first thing I do? Well, I can call an agent. I can go to this website. So what happens? I want to sell this house for $400,000. iBuyer, what do I do?
Okay. So iBuyer is going to look at things and say, okay, look, on average, let's say you're going to pay a commission of, let's just use the number of 6%. Okay, so on $400,000, that's $24,000. And then they'll look and go, okay, in your market, on average, homes sell for about 95% of asking price.
Okay.
So now we got to take, that comes out on $400,000.
Which is that consistent number.
That's a consistent number.
Like the past 24 months
yes,
at least.
consistently.
So
now on $400,000, that 5% is another $20,000. Okay, and then hey, on average, your market's taking 3 months to sell. How much is your mortgage payment? $3,000 a month. Cool, that's another $9,000. So from that $400,000, we're subtracting $24,000 for commission, $20,000 for the list price to sales price ratio, $9,000 for your mortgage payments and carrying costs while you're selling it, and at the end of that, you're walking away with $347,000. Where the direction of these iBuyer companies is going is that they'll just cut you a check for $347,000. So as a seller, you're walking away with essentially the same price, and you have all the
same net.
The same net. So, and you have all of the convenience of not tramping people through your house, not having to go through staging, not being interrupted. They want to do a showing during their, all that stuff goes away. And from the iBuyer model, they just bought a $400,000 house for $347,000, and now they're going to steer you towards their real estate agent, their lender, their title, their whatever, and it is a super profitable model from the iBuyer companies. So look,
the quantity,
of course,
and look,
dude, it's $50,000.
If a broker can make money like that, so can a fintech company that has tons of funding behind it. And this is the thing. The idea of telling people, look, the house you want to sell for $400,000, but with the iBuyer model, you're only going to get it for $347,000. It's not, once you break it down like that, once you take the commissions out, when you take the average sales price in the market, once you take out the fact that you're going to start still make payments there. And even if I want to be difficult and I tell you, yes, Scott, but those payments are going towards my principal. First of all, not everything is going towards the principal.
Actually, a small percentage probably.
A very small percentage. And second of all, you don't have to do repairs. Yeah. You don't have to do inspections. You don't have to deal with all that.
Yeah, now look, let's talk about something else on this front, okay? Is iBuyer a dominant platform now? No, but here's what we got to understand, okay? Online dating was around for a long time, but it was freaking weird and creepy, so it wasn't done. And at some point, the general public accepted it, and now online dating is how it's done.
I'm sorry, something that comes even closer to us. An online mortgage application.
True that, man.
It's so complicated.
Not that long ago.
It's such a big purchase. Nobody's going to give all their information online.
It happens every day.
The number one lender in America is us. And we have an online app.
Yes, which is faster. It's faster than a rocket, is what I'm told.
It's faster than a rocket.
Faster than a rocket. But look, so, my point is that, and let's talk about Uber, okay? I have teenage daughters. If 10 years ago somebody would have told me that I would let a strange middle-aged man pull up to my house and I would tell my daughter to get in his back seat so he could drive her someplace.
It was safer.
I would have punched you in the throat.
Right. Yeah.
And nowadays in many communities that is considered safer than getting your kid a car.
Yeah.
And with my children just starting to drive, well, maybe they're right. So look, my point is this. At some point, possibly, maybe probably, at some point this becomes socially acceptable. And when it does, a year from now, a decade from now, I don't know, but when it does, it's going to change the face of the industry. This isn't doom and gloom. Look, real estate agents aren't going anywhere. Lenders aren't going anywhere. And for the record, travel agents haven't vanished either. There's just fewer of them, right? Financial advisors aren't going anywhere. They're still there. There's just fewer of them. So I don't think this wipes out the industries, either real estate or us, but I do think it wipes out the people whose heads in the sand.
Look, it disrupts it.
Exactly, digital disruption.
It changes it, and it's scary because the convenience of it. There's a lot of value in it. Look, as a seller, it's an attractive model, so it's scary, but at the same time, it's exciting.
Yes,
because then the value of an agent has to be beyond selling the house for a market, just like on a regular, just for financial advisors. If all you can do for me as a financial advisor is do the same thing that the S&P 500 is doing, I just buy
an index fund.
As an index fund, the Vanguard index fund, which is cheap, and that's it.
Absolutely, and that's so. What's going to happen as a result of all this is that expectations are going to rise, and the good players are going to raise their game with it. I mean, we spent all morning working on completely changing the mortgage experience for our borrowers because we have to change to accommodate this.
So that's what we did this morning, right? And this morning, that's what we've been doing for the past month, right? And what's up, Stephanie? I have a question. He says, so what would you think those of us in the industry should do to stay ahead?
Dude,
so look,
that's exactly what we've been talking about.
Yeah, and that's...
I got to take this. So look, I'm sorry.
Because it was to you.
Well, yeah, but you talked over me before, and screw it, it's worth it. So what was her name? Stephanie?
Stephanie.
What's up, Stephanie? So look, we got to understand this, okay? Walmart is absolutely no threat to Nordstrom, okay? So what you have to do specifically is step up your game so you're more of a Nordstrom experience, okay?
Right.
And one thing that we started out, just give a little example of some of the things that we're going to be doing in our experience is whenever we work with a client who has young children, we give them the Berenstein Bears book called Moving Day. Okay, and we take some time to go through people's Facebook feeds to see what's important to them. We heard about one lender who his office is out in California. His office is near a Starbucks. They find ways of finding out what people like to drink. When they show up for their appointments, their favorite drinks are waiting for them.
Not just that, but the value of using us or of using you or of using, any real advisor has to go beyond just the purchase. We've been talking about that. We've been talking about doing a more in-depth financial analysis.
Yes.
Look, the expertise that the real estate agent brings to the table, just like the expertise then the mortgage lender brings to the table, has to go beyond quoting the rate and simply selling the house for what the market is doing. So that's really the struggle is, how can I give you an excellent experience? We're doing something that's called we're calling it the perfect loan process, where we really want to make sure that everybody from start to finish has a really a true experience where they know us, where we're sending videos
and
constantly,
wowed.
where they're wowed throughout the whole process, because it's a stressful process.
It's a terrible process. I mean, let's be honest, it's terrible.
And it's a scary process, even as convenient as that might be. The process of getting rid of your biggest asset and moving into another asset is a scary process.
Of course it is.
So people are looking for guidance, and that's what these guys will never be able to do.
And hand-holding. And that, so look, we have to, we all have to take an honest accounting of ourselves. We all like to say we're different, but truthfully ask yourself, are you really different?
And if you are, do you do it consistently?
Yes.
Do you communicate it? Do you deliver that every single time? And look, to be completely honest, the whole thing that we've been working on for the past year, it's because it wasn't.
Yeah, look,
because it wasn't consistent. I could not say honestly that I was doing everything perfectly 100% of the time.
No, and without systems and structures and things like the perfect loan process that we're designing, we can't. So look, back to the iBuyer thing. It's real, and what the other thing we need to all do is we need to be aware of all of these changes that are coming and the pros and cons of it. Look, I'm a firm believer in this. There is massive opportunity within change. Warren Buffett talks about hit hard when there's blood in the street. So I think there's a lot of opportunity here, but I think we need to be deliberate and proactive.
Yes, and to be aware of that, to be aware that models like this exist, especially before they become mainstream, is very important.
Yeah.
And the thing is, not all houses approve for these things. I don't remember the numbers specifically, but it's a very, very,
right
very,
now it's
very
a small
few,
number.
It's a very few percentage.
Number.
So to even know that this is part of the conversation just makes you different.
Yeah, and look, let me give you this example. This is something we've been doing. So when we sit down with clients now, we're trying to talk them into taking a higher interest rate. And as counterintuitive as that may sound, just hear me out, okay? If we feel and we can prove that we are heading towards a recession, and we can prove that interest rates go down during a recession, and then we talk to clients about, look, let's try to minimize your closing costs.
Don't pay points.
Yeah.
Have the seller pay for closing costs.
All of those things, okay? And then what happens is we know that whatever mortgage we put you in 2 years from now, we're likely going to refinance you out of it.
Appreciation is going to be higher. Your rate is going to be higher. You're going to be put in a better mortgage. We're probably going to be able to lower that 30-year fix to a 25-year fix and put you in the same place.
And now all of a sudden, we're advising people on a long-term basis where, like you said, like you go from a 30-year mortgage to a 25-year mortgage, you could shave $50,000, $80,000 off of payments. Now, does that work for everybody? No. What's your exit strategy? All of those things. But this is just one little context where we could have a consultation with people, understand their specific situation, and craft the advice and service we give them around that situation that they laid out for us, not to mention their emotional needs and desires in regards to that, fears about money, etc. You lay all that out, fintech, which stands for financial technology companies, fintech companies simply can't and won't be able to do that.
Look, the majority of people, the best path towards wealth, the best path towards retirement, it's the real estate.
Yes.
But people have no idea how to maximize that. And if we really are professionals in the industry, we need to help them not only with today's transaction, but we need to help them, look, this is the path that you need to take so you can retire, and you can retire properly. Maybe you can take advantage of a reverse mortgage, or you can retire and you already own your assets. And this is how I'm going to help you, and this is what I see happening in the next couple of years, and this is the plan that I have laid out for you. Look, one of the things that we heard in the conference that I really, really like is, if you're really an advisor, don't be afraid to have an opinion. You have to tell the client, look, this is what you should do. Now, I'm not going to make decisions for you, but I strongly suggest that you do this, because this is what you should do.
On the tail end of a proper consultation and needs analysis.
Absolutely.
And that's, that's the personalized service and care and attention that that isn't going to go anywhere. So look, again, this isn't a doom and gloom thing, but the iBuyer model is turning into a very solid business model. And it's going to impact the industry a little bit now, and then that'll grow as time goes on. But it's going to impact the industry. And
another thing for other agents, it's a good opportunity to get into on the early stages with this companies too.
Yes,
because they need people on the ground to find the other house. So and they have their systems and how they pick the agents and all that. But becoming a part of this process on the earlier side, it's beneficial for the agent.
It definitely can be. It definitely can be. What else is going on with change in the industry?
What else do we have?
I don't know that we have anything else outside of home prices home prices and home activity is staying very stable right now.
Staying very stable, which is good.
Which is a good thing. And here's something
else. It's good
else.
when everything stays stable and the rates go down. I mean, that's good. Purchase power.
Yeah. Now, one of the other things, though, that I think we need to be mindful of is as we start getting into the recession, fear is going to increase,
which increases volatility.
Right, and we need to get knowledgeable in that so we could combat it.
Yes.
So,
the path towards the lower interest rates that we've been talking about is not a straight path.
Nope. A lot of this.
I think that's very important to keep in mind.
Mm-hmm.
And that's it, man. Loans are good. Loans are, we're getting. We talked about the programs. Now. We have a lot of different products, and I'm excited because now it's been a while, so we're trying a bunch of them. I closed that second home with 5% down.
I've done it. Yeah, the jumbo one, which I just talked to an agent.
Yeah, we've done a couple of those.
101% loan on I've done them on condominiums a lot. Which,
oh yeah.
So look, there's lots of opportunities out there. We got to stay in touch with our database and see how many other people we can help and educate during these changing times.
And that's it, guys. Look, in the past 3 videos, we've talked about a recession coming, we've talked about the iBuyers, and we talked about the disruption on the industry. I am very, very, very interested to hear what people think about these things.
Yeah,
what
please.
People think about the recession coming, and all this disruption in the industry, especially people that are in the industry. Well, what do you think about that? Do you think we're wrong? You think we're right? What are you doing particularly right now to change the way you're doing your business? Because it's interesting, man.
It is interesting. And look, all these Facebook Lives that we do every Friday are posted on both of our YouTube channels. So please follow us on YouTube so you get these things, and please leave your comments. I love having kind of friendly banters and discussions back and forth
absolutely.
with people. So,
all right, guys.
I'll see you next Friday, guys. Have a great one. Call us if you need us.